Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Steve Resch. He's the Vice President of Retirement Strategies over at Finance of America, and we're going to take a look at the seismic shift in retirement landscape. Steve, it's great to have you with us at Market Site, and this retirement landscape shift, it's being driven by over 10,000 baby boomers.
Correct. Demographics are definitely driving it. You have 10,000 people per day becoming age eligible for retirement, and they're all looking for ways to successfully fund a 30-year or longer retirement period.
All right, and they're doing this through optimizing equity in their homes for income.
Exactly, yes. We're looking at home equity. When you look at some statistics, baby boomers have about $7 trillion in home equity, and that could be anywhere from a third to two-thirds of their net worth. And when looking at a 30-year retirement funding period, it kind of makes sense to use that as an asset class and bring that into the planning process.
All right, and this is done via reverse mortgages.
Correct.
Okay, so tell us a little bit about what a reverse mortgage is.
Reverse mortgage is really just an opportunity to access equity in your home without any required payments. So there's no required principal or interest payments. Borrowers would still be responsible for taxes and insurance. But it's the concept that you can have access to funds without having to make a monthly payment, so you don't disrupt your cash flow by having to make payments for borrowed funds.
So when you hear reverse mortgage, especially for the layperson such as myself who is not familiar with
Sure.
the product, am I giving my home up, or who owns the home? How does that work?
Now, that's one of the main misconceptions. This is a mortgage like any other mortgage in that you always retain title to this property. So you have the title. The differences being, first of all, is how you access the capital. So there's different ways of accessing it, whether it's a line of credit or annuity type payments or cash. And the other difference is how you pay this back. So as I mentioned, there's no required monthly principal or interest payments, and you don't have to make any of those for as long as you're living in that property.
So let's say your home is worth $300,000, right? Would you get a full $300,000 lump sum or a percentage of that?
It's a percentage of that. And, you know, the older you are, the more you can get, but I could say roughly figure maybe 50%. So for a $300,000 home, you'd probably have access to about $150,000 in general.
How does it get repaid?
That's repaid at the end of the loan term, which would be when you permanently move out of that home or pass away. So what happens at that point in time, the family or the borrower, depending on who is settling the loan, they would sell their property, or they could refinance it, but they would sell the property. Any equity that remains belongs to the family. If they happen to owe more than the value of the property, and this is a nice protection feature about this loan, if they owe more than the value, it's a non-recourse loan, so the lender only looks to the property for satisfaction of the lien.
Right.
So this, again, when you're looking at a retirement planning strategy, knowing that you have access to capital regardless of what happens to the value of the property, that you're going to be capped at that level for repayment, is a great peace of mind factor.
It's almost like taking a loan against your 401k. I believe you can only take half of that value in case there's fluctuations in the stock market.
Exactly, exactly.
Okay. Now, with Finance of America, where do you fit into this ecosystem?
We're one of the largest wholesale reverse mortgage lenders in the country, but more importantly than that, we are one of the leading innovators in proprietary products. Traditionally, the reverse mortgage has been an FHA-insured product, but we've had requests and demand from our client base for more creative and loans that are for higher valued properties. So we have a proprietary suite of products that are for home values up to $4 million, or loan amounts up to $4 million. And we're doing a tremendous amount of those now in coastal areas like Southern California, Florida. We've just been approved now in New York State, Massachusetts to offer those products as well.
So you're targeting areas that clearly have a higher retirement population?
Yeah, ultimately we want to do the entire country, but we have to be approved state by state, so we're going to those areas first and then working inwards towards the center of the country.
So back to the product itself, if you have an existing mortgage, you haven't paid off your home yet, can you still do a reverse mortgage?
Well, it would need to be paid off. Okay, so in that example of $300,000 home and you have $150,000 available, if you owed $50,000, we're going to pay off that first $50,000, then you have $100,000 left over to do what you want, whether it's in a line of credit or take as payments or cash.
All right, got it. Steve, thanks so much for joining us.
You're very welcome. Thank you for having me.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.